thank you very much for this privilege being here in attendance in Berlin and this very prestigious event. Ladies and gentlemen, we have just survived a hurricane. The hurricane of the global financial crisis is severe. The impacts of that will be with us for decades. The previous large event such as that was back in the 1920s, with the Depression in the US, expanded globally, and moved into social and other economic events. And just like those large crises, it is very difficult to predict, similar to the weather. But there are some telling signs, some signs of storms. And the way I like to look at storms is through the sea. Whether it's the wind, whether it's the waves, the turbulence. And sailors, some of you may be sailing, may know about the Beaufort scale. It's a scale which goes from 0 to 12, 0 being extremely calm, just like a lake, moving into a storm, a gale, and then all the way up to hurricanes. But the importance of these crises is not just on the economics. It is also on the political and the social. So we've had the economic crisis of the global financial crisis, but now we're going through the political and the social impacts as the aftermath of that. Some of you may remember 1987. There was a lot of market turmoil. The stock market crash, Black Monday took place. Just over a quarter, or approximately a quarter of the assets were, or the value of the assets were lost in a day. It was also a relatively volatile period, both politically and socially. We are, in fact, at the epicenter of one of those developments, the fall of the Berlin Wall 30 years ago, instigating not only the reunification of Germany, but also revolutions against the USSR. We had the Central and Eastern European countries revolting against that. We also have the Tiananmen Square, again, so it happens, 30-year anniversary on the 4th of June this coming year, which represents the social unrest. So one is political unrest, the other is social unrest. And Deng Xiaoping proceeded to sort of ease those tensions, surpassing those tensions, about 10,000 people within Beijing. And the repercussions of that are still in the Chinese thinking today, and I'll talk about that in a second. So we've had political and social repercussions on the back of economic drivers, but what is the one tool which drives economies? If we were to select one factor which can drive economies today, I would select the Federal Reserve fund rates. The Federal Reserve being the central bank of the United States, and we have here, going back from 1955 until today, we have a rising interest rate environment all the way to the 1980s. The central banks, especially Volcker, had to keep inflation low and raised interest rates. And since then, we've had a declining period of interest rates because inflation was tamed. However, more recently, there have been 3 episodes which, I may say, instigated and triggered some of the developments we've had more recently. The first was under Greenspan. After a brief period of recession, Greenspan cut interest rates and kept them low for a considerable period of time. During those periods of low interest rates, what happens? Confidence starts to build, leverage takes place, and some exuberance, which he himself quoted on back in 1996. He could not understand why markets were that good in those periods of uncertainty. The second was again by Greenspan, which followed the 9/11 and the Iraq War of 2003. So during both of those 2 periods, Greenspan cut interest rates, kept them there low for a period of time, and interestingly, in that latter part, he very slowly started to raise them back up, which was, in my view, the beginning of the global financial crisis, the subprime leverage which took place at that point in time and led to the big recession and the subsequent event from that. And more recently, we've had quantitative easing and excessively low interest rates across the major central banks. So, what does that mean? What are the impacts of that? There have been 3. 1, ample liquidity, as central banks around the world kept interest rates low and provided funding through the quantitative easing. Secondly, technology. The technological advancements we've had, we're all aware of them, whether it's industrialization 4.0, whether it is the emails, the iPhones, the big data, fintech. And third, globalization. And globalization very much has been impacted by the former 2. the availability of capital and the technological advancements led to widespread of globalization around the world. Some of those have been benefiting from that. We can see here, this is the S&P, the US stock market, S&P 500, and the last rally is since the financial crisis. This has been a direct impact from liquidity, technology, and globalization. And just to put it into perspective, if you see the previous cycles, the global financial crisis, the correction, the dot-com bubble, the correction, and to put into perspective, the 1987 crash, you can't even hardly see it. This is the magnitude of the moves we have had over the last 2 decades, and the significant impact that those 3 drivers have had for a number of people within the society. But it has not been for everyone. Inequality has risen over the same period. We've had Euroscepticism come up because of the Arab Spring, which created the uncertainty in the Middle East, created the Syrian war, refugees coming into Europe, impacting AfD, impacting clearly Brexit, impacting concerns. So Euroscepticism is one, anti-globalization, which this particular yellow jackets represents. So these are 2 unexpected consequences of the global financial crisis. And if we look at the underlying data in terms of inequality, they're predominantly in the developed countries. US, UK stand out. And what have we seen there? We've seen Brexit, and we've seen Trump. So these are some of the unintended consequences of the economic impact within society and within politics. So what happens next? Are we heading into another hurricane, or are we heading into sort of a lake-type environment of calm waters? Well, I do not believe we're going to head back into a hurricane. Hurricanes do not happen that often, similar to the one we had in the GFC in the 1920s. And more importantly, economic, if I may say, hurricanes or political hurricanes do not happen when you're waiting for them. They only happen when you do not expect them to happen. And right now, politicians, policymakers, central bankers are always on the lookout for the economic impact and making sure that they ease interest rates in order to avoid another economic hurricane from taking place. So we're unlikely to move back into a hurricane. Are we likely to move into a more calm environment? Again, no. Maybe economically we are in a more stable environment, and we'll talk about that, but socially and politically we're not. So I do not expect a calm water, a calm sea. What I do expect is elevated volatility, elevated uncertainty. So how do we measure that? Well, similar to the sailors using the Beaufort scale, if you like, from 0 to 12, my favorite measure of uncertainty, of volatility, is the VIX. And what the VIX stands for is the volatility of the US S&P, of the US stock market. So the higher the VIX is, the more volatile the stock markets are. What does that mean? More uncertainty. Financial markets do not like uncertainty. So the more uncertainty there is in the world, the more volatile they become. So what we have here is, going back to the 1990s, a number of economic, political wars taking place at the top. And what is interesting is that after the calm, we have a crisis. 93 to 96, low levels of volatility, low interest rate, as we said earlier with Greenspan, created the Southeast Asian crisis. Again, the Greenspan second cut, 2004 to 2006, low levels of volatility, helped instigate the global financial crisis, the subprime leverage which took place. More recently, 2017, we never had so many days of sub-volatility. And the after effect is going to be also considerable. But, and this is, I think, an important but, it's not doom and gloom. There's been a lot of doom and gloom about China weakening, slowing down, the impact it's going to have globally. I'm not worried about China. I don't think China is a significant economic concern. Why? Well, before why? First of all, the Chinese levels of growth have been slowing down, yes. They're going at a 6% rate, or 6.2, 6.4% rate, rather than the 10% rate, or the double-digit returns they had. But what is more important is that the overall size of the economy is multiple times larger than what it used to be, which is the second chart on the bottom. So a 6% growth rate of a pie this big is much more important than a 10% growth rate of a pie this small. So in terms of the size of the economy, it's continuing to expand. What does that mean? Wider and increased number of middle classes, which are looking for the experiences that we are aware of. Experiences of tourism, which is your industry. Experiences of consumerism, which is impacting industries around the world. So China is not of my concern. I think the economy continues, and more importantly, going back to the Tiananmen Square picture I had, the Chinese Communist Party wants to ensure that it remains in power. It needs to maintain social cohesion, and therefore maintain that level of growth which provides that. What about the US? The second concern. I do not believe we're heading into a US recession. I think that Trump wants to come back in 2020. And he knows that if the US goes into a recession, he's not going to make it. So what does he do? He eases on the rhetoric, the trade tensions with China. He uses the NAFTA as a way of providing support. But he also uses the tension with China, easing that in order to avoid volatility and avoid the US from moving into a recession. Also, unemployment is still low, participation is high. And the very important canary in the mine, if you like, the example there, is the US yield curve. Now, the US yield curve is, if you imagine, like a break. The 2-year and then the 10-year. The 10-year normally should be higher than the 2-year. But if the 2-year starts to rise, then it acts as a brake. It's like pressing on a brake paddle. So once you press that brake and the yield curve inverts, the economy slows down. And if we see previous periods of recession in gray, there was an inverted yield curve just before it. We're not inverted yet. It will likely to happen in 2021, but I don't believe that US is in a risk of a recession at this point in time. So overall, yes, we do see weaker economic growth, but coming off from stronger levels. And the average of we have here the World Bank, the IMF, and the OECD, expect world growth to gradually come down from 3.4, 3.3 to 3.2%. A number of countries will be significantly superseding that, whether it's India, whether it's China, whether it's Indonesia, with some countries lagging behind predominantly because of central bank independence concerns. But broadly, I'm not that worried about the world. I'm not worried about the emerging markets. Emerging markets will continue to do well amidst this period of low interest rates. The emerging markets and the middle classes will be expanding. Which takes us to Europe and the UK. And Europe is my biggest concern. And predominantly the political side, because Merkel is departing. Merkel has been at the core of keeping this together, keeping the show together for the last few years, Merkel and Draghi. She's been keeping the Eurozone together and Germany. And with her departure and Draghi's departure at the end of this year, I believe there's going to be a lack of power from the middle, which is going to be moving to the peripheries. And there's no one here right now to replace that leadership. Macron can't do it. He would have wanted to do it, but he cannot do it domestically, internally, within France. And also, the new Hanseatic League will not let him do it represented across EU. They do not want a closer Eurozone unless some of those countries deal with their own financial situations. So, politically, I'm concerned. Economically also, the EU and the UK have been lagging behind the US. The US, which is the orange little graph, the industrial production has been rising, whereas Europe and the UK have been lagging behind, partly because of the more expensive currency, partly because of the uncertainty surrounding Brexit. Socially, however, I am seeing some positive signs within Europe, within the EU. And this is a poll which has been taken over time, and what it shows is that the blue line, the total positives, have been coming down, were coming down until the crisis, the Eurozone crisis, took place, and the negatives, the gray, converged. So the blue and the gray, the positives and the negatives converged until 2012. That was the pinnacle of the crisis, when Draghi said the whatever it takes. At that point in time, if those two switched, it could have been the beginning of the end of the EU, of the Eurozone. So they averted that crisis. The second crisis which took place was smaller, but still significant. We've seen these impacts here in this country very much, is on the immigration crisis. And again, that was averted. So in terms of social issues facing the EU and the Eurozone, if we highlight the issues on the right-hand side, 6 of the key drivers, or 6 of the key concerns, only 2 of them right now, or 1 of them right now is of significant, is immigration, the blue line. Climate change, economic, unemployment, state of member states, and terrorism are not. Economy was a concern back in 2011, the peak of the yellow line, dealt with, immigration dealt with. So socially, there are no significant concerns. Although we may have Salvini, we may have Orban, it is not as raised as they were. And economically, the ECB is very much aware of that. They want to make sure that the economy continues to do well, or else this is going to come back. But the interesting point to note as well on this particular slide, this was another poll which was asking the EU citizens whether they're in favor or against economic and monetary union with one single currency. So in favor, in the blue, the against are in red. And what is interesting here is that one particular country voted don't know at a 13%, and that's the UK. And what is funny is that the UK has been debating that issue for the last 3 years, and still there's more don't knows from the UK than from any other country. Which brings us to Brexit. It's hard not to mention Brexit, obviously, and I'm sure many of you have already bored listening and talking about it with the uncertainty that it is taking. In my view, May will deliver Brexit. She'll bring it through. And the reason why she'll bring it through is she's using two sticks. The one stick she has is to the Tory party, to the Conservatives. She's basically threatening them with a Corbyn government. She's saying to them, unless you compromise in some shape or form with me, then we're going to be out of government and Corbyn is going to replace us. So that's the one stick to the Tory party. The second stick she's using is to the Eurosceptics within her Conservative Party. And the stick that she's threatening them with is the second referendum. So she's basically saying to the Eurosceptics, unless you guys are willing to compromise and come in some way or form, then I'm going to call for a second referendum. And you know what? All the hard work that you guys have been doing for the last 40 years to get this deal on the table could be lost. Are you willing to take that risk? They're not. They're already starting to compromise. So I believe that the Corbyn and the second referendum are the two sticks which, number one, have kept her in power, despite a lot of sort of uncertainty about that, and secondly, will drive that through. There's a third element, however, which helps in her negotiating tactics, and that's the weaker economy in the EU. Because the impact is going to be significant, not just for the UK, but a number of other countries. And what that obviously creates is potential opportunity in the UK for foreign investors, non-sterling investors looking to invest in the UK. Because in that sense, you get, in terms of clearly with your industry, lower prices which have come through, lower liquidity, and a lower currency. So for medium to longer term investors, the UK, in my view, represents an attractive opportunity. Now, bring it back out of the UK and more to a global level in terms of yields. Yields and interest rates to remain low. The borrowing costs will remain low, supporting both growth and investments internationally, globally. Central banks are still aligned in doing that. Even the Fed, which I believe may increase rates one more time. That's basically at the end of that, the tightening cycle. So, central bank credibility has been the key driver. Real yields have been supportive. I expect US 10 years between 2.75 and 3.25%. So not much higher from where we are today. And that will also create attractiveness not only in private markets, but also in asset classes which tend to deliver slightly higher returns. So, some concluding thoughts. And bringing it back to the Beaufort scale which I started the discussion with. Economically, we forecast a force 3 to 4, which is sort of a light to moderate breeze. I'm not concerned about the economics. As I said earlier, it's unlikely to hit a hurricane when everyone's sort of fearful of a hurricane. The central banks are on top of that. So I expect central banks to maintain ample liquidity, China and US to continue growing at albeit lower levels of growth, but maintain that stable level of growth, and emerging markets to outperform with the emergence and growing of the middle classes to benefit the industry that you're in. Politically, it's a little bit more dicey. The force sort of 4 to 6, so gentle to fresh breeze, potentially going to a gale if the economies underperform. And this is the key if. If the economies continue as they are, our central case scenario, then it should be relatively okay, 4 to 6. But if we see a weakness, then that's where politically we start to push. So, May, to pull through Brexit, vitriolic EU politics leading into the May elections here, important. Tensions between Trump and Germany to increase. I think Trump is going to divert his focus from China to Germany. China is an expensive risk for Trump. He does not want to lead into recession volatility. Germany and the EU are an easy play. And he's going to be using that ahead of the 2020 elections, in my view. And in my view, he's most likely to stay in power until 2025 because the US economy will do okay, and the Democratic Party, I think, may have a little bit difficulty finding someone to unify the party. But we shall see about that. And finally, socially, it's the most at risk, I may say. We forecast a force 4 to 6 with a potential force of 10 if the economies underperform. And that's where the populism comes in place, the anti-globalization comes in place. This is the inequality of the population. And the shift towards populism and anti-globalization continues in the developed countries. We also see a shift towards local and regional rather than global, and very importantly, climate change impacting investing, ESG as well. And this industry is at the pinnacle, is at the intersection of the economic, of the political, and the social development. But I do expect interest rates to remain low, so investment opportunities are going to be there, but albeit in a slightly elevated political and social environment. Thank you very much for that. I'd be delighted to take questions, but also have meet you for a coffee. I'll be here over the next couple of days and discuss these things more. Thank you. Thank you.
Thank you, Thanos. We do have some questions, so stick around for a couple of minutes. You said something as we just get the questions up that I found to be just incredibly interesting. Hurricanes don't happen when you're expecting them. So are we to be expecting a hurricane?
No, I do not expect. I do not expect that we should be expecting a hurricane, if that makes sense. I truly believe that hurricanes tend to happen when we least expect them. And we are talking about the severe hurricanes, the global financial crisis, the 1920s depression. We will have recessions. The last 2 recessions we had, specifically in the US, were just a few months, sort of 11 to 12 months, 8 to 12 months. It's not something significant. They did not have a significant impact in GDP. But the hurricanes of recessions, then they do come less often, and we should not be worried about that, in my view.
Got it. Well, talking about recessions and some of the quantitative easing, let's get to this question that's on the screen, the third one down. So if a recession hits and interest rates are already so low, being that they are, even though they've gone up over the last 2 years, what monetary policy options do central banks and governments have?
Great question. And first of all, I think that's why it was important for the Federal Reserve to increase interest rates over, as it has been doing, to where it is today, and I believe it may increase interest rates one more. Why? It just has that sort of 2.5% level of dry powder to use in case the recession comes through. However, what if it does not have that interest rate? What if we're in Eurozone with the ECB? There are no interest rates to do. In that case, they just continue with the quantitative easing. They just boost their balance sheet again. They start borrowing money, they start sort of spending and building the balance sheets of the central banks. And is that prudent? Of course it's not prudent. But this is something, especially in Europe, that they're going to do in order to avert the very delicate social and political situation they have. Because if the Eurozone economy starts to head south significantly, then that's where populism starts picking up, Le Pen comes in, Orban, Salvini, Bannon from the US, it becomes not very nice.
Well stated. Well, talking about not very nice, what is your prediction, as Nicole is posing here, what is your prediction for Brexit outcome, and how will it impact tourism in Ireland?
Yeah. Well, I think that Brexit will happen because of the 2 measures I mentioned, the threat of a Corbyn and a second people's vote. There may be delay. Whether there's a delay or not, I don't think that's important in my view. Whether the Brexit takes place at the end of March or whether it takes place at the end of May or June, it's neither here nor there. I think Brexit will take place, and as a part of a compromise, we will hopefully have not a hard Brexit, but a sort of a more compromised deal, which does not either shoot the UK or the EU on the foot. And tourism, hopefully, that'd be less contained, less of an issue once the agreement takes place. It would be a concern if there was a no-deal Brexit. Then here, of course, tourism will be impacted, not only in Ireland, but also in Iceland. It would have a significant impact across Europe. But I think we'll be able to avoid that.
All right, so moving past the economics and let's get into the political sphere. Let's hit the last question there. Is populism or socialism more likely a long-term political ideology?
Great question.
It's a tough crowd here.
Yeah, no, there is a shift. There is a shift. We are seeing a shift. We're seeing, interestingly, for those of you who lived in the sort of the communist times, we're seeing a shift whereby in the US, on the Democratic side, we're seeing candidates coming from the uber left, as we're seeing Jeremy Corbyn from the UK. So populism does not need to be right-wing any longer. Populism can be both left-wing and right-wing. And we're seeing this change in ideology as part of the push against the globalization, the push against the inequality which was created because of the ample liquidity in the global financial crisis. So I think it is not a new ideology. The ideology has been here, but I think it is a shift which will continue to be with us. And something that we need to take into consideration, also in terms of wage negotiations, also in terms of immigration controls and issues. So on the one hand, and I think that is also very important, especially for our industry here, is that on the one hand, you've got the costs of wage, labor, immigration constraints, but on the other, you have things like commodities and oil. And here you have politicians, such as Trump, Russia, Saudi Arabia, trying to contain the price of oil. So you will have some elements of push-up prices and some elements of push-down prices. But the ideology shifts are, I think, here for the medium to long term.
So populism is here to stay?
I think populism is here to stay.
Okay. Let's actually cut back to Brexit. There's a question here from PV. Certainly your home country, everyone was expecting Grexit. The Brits obviously stood you up and got Brexit. So if Brexit does happen, then who comes next?
Oh.
Or is there
No.
next?
Okay. If Brexit takes place, and clearly from an EU point of view, what the EU, they do not want to make it easy for the UK to leave.
Yeah.
Obviously, that's understandable, and they have not made it easy. But for the EU to sort of unwind and start breaking up with the next level, I think that would happen only if there is a significant economic weakness, economic crisis, which re-triggers the social and political events. And as I showed in my earlier slides, some of the social issues are no longer that significant. And they are making efforts in terms of dealing with the refugee issues. They're traveling to Egypt. Turkey is back on board. So ways to mitigate those frictions, those social frictions, will be there. So as long as the economy continues to do well, I don't see a reason for another country following in the UK's footsteps.
We are an investment conference, so let's hit the question there of what are your preferred emerging countries to invest in?
Well, from the emerging, in my view, sort of as a portfolio manager, I always like the concept of diversification. You can never be right in one particular theme, so it's always best to diversify. So my preference would be to be diversified across the emerging market regions. I have a preference for the Latin American region. Why? Because it has been badly hit over the last decade. It was badly hit because of the gradual slowdown in China and the commodities from that side. It was also badly hit because of the political developments there. And now we're seeing, again, going back to this populism, Bolsonaro is there, populist, right-wing, but there are some structural changes he's making in terms of the pension reforms, in terms of the budgets. So I like Latin America, I like Brazil, I like Chile very much, I like Mexico. But also on Asia, we have got India, which is growing up above 7%. There are elections, so there will be some volatility here. I think Modi is becoming a little bit populist, but once those elections come through, which I believe he is going to win, we're going to focus again back on a more structural story. So I like emerging markets, but diversified across the board.
Got it. We got a couple more minutes, or one more minute, so let's ask, keeping on the economic and geopolitical front, what is the prediction, or what is your prediction, rather, for Russia economic cooperation with China or EU?
Russia, the EU. That was an easy one until you threw the EU here.
It's not me.
Because that, I think this is key. And I mentioned earlier, obviously because of the matter of time, I couldn't expand on it. But the reason why there's going to be an increased tension between the US and Germany is not just because of the NATO 2% GDP, which Trump has been focusing on for the Europeans to provide, but it's also specifically within Germany and Russia because of this Nord Stream 2 pipeline. So Germany is in an agreement, is looking to build this pipeline, the second pipeline, Nord Stream 2, which is not in favor by the US, not in favor by a number of other EU countries. So the tensions are increasing. I think Putin is, to his benefit, is looking to create a rift between the European Union, between the NATO alliance, and he's succeeding in that. So I think some volatility coming from Putin. In terms of Russia and China, he's been relatively quiet. His expansion is in the Middle East, his expansion is into Africa, not so much in China. He's letting China and the US and North Korea deal by themselves.
Understood. Well, listen, Thanos, thank you so much. That was fantastic. We all enjoyed it.
Thank you.
Please, everyone, give a very warm applause to Thanos Papasavvas.
Thank you very much.
Thank you. Thank you.